Countries in trouble, Matt, and take it off the bank's balance sheet, yes. But then if it was the contagion were to go on to Spain or Italy, that 1 trillion may not be enough. You're then talking about a bigger sum of money. That's why I think yesterday there was no clear decision, because in addition to what was happening and what they disclosed, you have to figure out whether France is going to bear the burden of saving its own banks, or whether they can tap the EFSF, the bailout facility, to do so. It is similar to your having insurance on a car where you have had an accident, you've had a $10,000 charge, and the insurance company says you pay the first $6,000 and then I'll consider whether I want to pay you. I think that's the big difference, except the sums here are much larger.
So do you think that the sums are so large that there's no way Merkel and Sarkozy will be willing to take them on? I mean, as you mentioned, they're going to get some help from other countries in the EFSF, right?
They are going to get help from the other countries. I think the way it's going to go is that the French are the ones who are going to blink. I think the French president will have to take on saving his own banks, but that gives rise to a new problem. Keep in mind, France is now rated AAA by all the major rating agencies, and if they start bailing out the banking system, you're going to have a situation similar to Ireland, where a country which was very highly rated got lowered in rank because what became a banking problem eventually ended up being a sovereign problem. So yes, I think the French will give in, but then you're in a new situation regarding where the European debt crisis is headed.
What do you think happens if we don't get a full solution in 3 weeks? And then do the markets punish them? Do global markets drop?
I think two things happen, Matt. On the equity fund, fixed income side, the fixed income rallies again and the equities are going to be sold. And then on the exchange rate side, we saw that the euro is up about 2.5 cents today alone. And the euro is going to have a big drop from about 136 to the US dollar, going closer to the 130 level very quickly if there is disappointment.
That was Kamal Srikumar, Chief Global Strategist at Trust Company of the West. All right, let's hear from our guest co-host, hedge fund manager Neil Grossman of TKNJ Capital Partners and Lincoln Ellis of Strategic Financial Group. Neil, this is right in your wheelhouse. You're a former central banker. How much faith do you have in the plan to form a plan over in Europe?
Well, I think you have just pretty much characterized it. They've been speaking a lot, not doing much. You have to hope they're going to do something here, and the question is it workable or not? I mean, the guest was discussing things like the currency and the ratings. One of the biggest problems is the fact that you've got a currency that's designed to be strong, and the split between countries that need their currency to depreciate and those who can manage the stronger currency. And I don't know how you get from here to there so easily. I mean, one of the solutions might be to watch Germany step out, which would let the currency actually devalue, which seems to be really the necessity for a lot of the countries.
I haven't heard that before. You're saying Germany is holding the euro up. You take Germany out and it's actually better? Does anyone really believe that?
I think that all people would agree with that. I mean, if Germany leaves, then the currency can be allowed to depreciate and the other countries will become naturally more competitive. The problem is the countries in the south, I prefer to call them gypsies myself as opposed to pigs, but the countries in the south are uncompetitive with currency, with such a strong currency. And so you've got sort of two strains of resolving the crisis. One is the fact that, you want them to pay down their debt, but they can't grow fast enough to do it. And the other is, which would be more normal in traditional, central bank solutions, you watch the currency allow it to depreciate, that they become more competitive naturally, and over time they can grow their way out of the problem. At the same time as that they do write down some of the deficits.
Lincoln, what do you make of that?
Well, and that's exactly what I think that they're going to try and do. I think they're going to try and drive this middle road where you do have a euro that doesn't trade 135, 145, 150, but trades 125, 135, and that allows
which is a little cheaper than where it's been.
That's right, and it allows the $1 trillion that Sri was referencing to actually do the job of taking care of the peripheral issues here. I think Sri has been sort of a little bit bearish for too long. There are definitely things to be done.
Okay, well, then we're going to hear the other side when we get back, because Wall Street veteran Joe McAlinden is actually optimistic about even European earnings. We are back in 2 minutes. Lots to debate.